We all want to leave as much as possible to our family and loved ones. In the UK, the first £325,000 of an individual's estate is free from inheritance tax, but everything over this could be taxed at 40%. Without careful planning, HMRC could easily become the largest beneficiary of your estate, leaving your family with a large tax bill to settle. There are a number of arrangements available to help you reduce your inheritance tax liability. A discounted gift trust from Canada Life is an arrangement whereby you receive regular payments to supplement your income and can reduce the amount of inheritance tax that could be payable when you die, which could increase the amount your family receive. You invest in an investment bond held under a discounted gift trust. At the outset, you will select the amount you want to receive and the frequency of the payments, such as monthly, quarterly, half-yearly, or yearly. These payments are designed to continue for the rest of your life. The trust is a legal arrangement whereby you appoint the trustees to hold the investment and the people you want to benefit. These are the beneficiaries. You as the investor can be a trustee, but you can't be a beneficiary. With a discounted gift trust, you can name specific beneficiaries that cannot be changed. This is called a bare trust. If you don't want to name specific beneficiaries or want to give the trustees the ability to change who benefits, you can use a discretionary trust, as you are providing the trustees with discretion. The benefit of using this type of arrangement is that any growth on the investment is outside of your estate immediately and therefore not subject to inheritance tax when you die. Part of your original investment is also outside of your estate immediately, with the balance outside after you have survived a period of 7 years. Many people use investments to provide an income later in life, but in many instances the capital remaining on death could be subject to 40% inheritance tax. By gifting capital in a suitable trust, designed to provide regular payments back to the investor, the potential inheritance tax payable could be reduced. As with all important investment decisions, you will need to speak to your professional advisor before investing.